After sharing my home buying journey, one question I kept getting asked was how do I manage my short-term funds for something like this? Because we're not just talking about $10,000 or even $50,000. In my case, it's almost $300,000 in cash that's set aside for my new home. You obviously don't want all of it sitting in a regular savings account earning just a mere 0.05% per annum, especially when inflation is at an average 2%, eating into your purchasing power. But at the same time, you can't afford to take unnecessary risk with monies that you need in the near future. So in today's video, I'll share exactly how I manage my short-term cash, the mindsets, and where chocolate finance fits into my overall money strategy. And by the end of this video, you can decide whether it makes sense for monies that you need within the next few years. Without further ado, let's dive right in. Let's go. Before we decide where to put our money, I always think about the objective first. Only then do I look for the financial instruments that would best fit that objective. So here's what I mean. About a year ago, I knew that I wanted to buy a home after returning to Singapore from Korea. And because I knew I'd need that money within a year, investing it into a broad-based index fund or even individual stocks just didn't make any sense. The stock market is simply too volatile over such a short period of time. The same applies if you're saving up for a home renovation, wedding, or preparing for a baby. Imagine your wife is about to give birth and your investments happen to be down a few $1,000s. You can't exactly tell the doctor, can we postpone the delivery for 2 weeks? Let me wait for the stock market to recover so I can pay the hospital bills. Life just doesn't wait for moments like that. If you need the money, you'll be forced to sell your investments regardless whether they're up or down. And if they are down, you're basically locking in on those losses. And that's why monies with different timelines needs to be managed differently. So this is how I manage my short-term funds. The first layer has to be risk-free because I need to know that a portion of my money will always be there when I need it. For me, that leaves two main options: high-yield bank savings account and Singapore savings bond. I'm not including treasury bills in here because your money will be locked up for 6 to 12 months. Personally, I prefer having a little bit of flexibility for my cash whenever I need it. So let's start with high-yield savings account. I'm using UOB One. At the time of filming, it offers an effective 1.90% per annum if you keep the full $150,000 in there. But you do need to fulfill two conditions. Credit in a salary of $1,600 a month and spend at least $500 on an eligible credit card. If you're keeping a smaller amount, the effective interest rates will be lower. For example, on the first 75k, it's around 1% per annum. Meanwhile, many savings accounts without any requirements are offering under 1% per annum today. And when Singapore's long-term inflation averages around 2%, you're barely preserving your purchasing power. The other option is Singapore savings bond. For the July issue, the first year interest is 1.46% per annum, increasing to 1.75% per annum in the second year. The trade-off here is actually liquidity, because unlike a bank savings account, you can't withdraw your money immediately. When you submit a redemption request, you'll receive your funds on the second day of the following month. So for example, if I redeem on 2nd of August, I'll receive my money around 2nd September. If I redeem on 25th of August, I'll still receive it on 2nd September. So while SSBs are considered very safe, they don't give you the day-to-day flexibility like a high-yield savings account. So that's the foundation of my short-term cash strategy. Once I've set aside enough money in completely risk-free options, I then look at the second layer, places where I can potentially earn a higher return while still keeping the risk relatively low. And this is where money market funds and cash management solutions come in. Before we continue, I just want to share that today's video is sponsored by Chocolate Finance. It's actually my first ever collaboration with them. I was the one who reached out because I've been using them as a part of my home down payment funds, and I thought it would be valuable to share how it actually fits into my overall money strategy. As always, I want to be transparent. Running this channel is my business, so I am paid for this collaboration, but you guys know I only work with brands I personally use. I've been allocating my money into Chocolate Finance since March of this year. Currently, I have $98,000 here, and daily I'm receiving about $4.90 through the top-up program, and it's earning 2% per annum on the first $20,000, 1.8% per annum on the next $80,000. I'll explain exactly how the top-up program works in a bit, but just because I saw an attractive rate doesn't mean I immediately transferred almost $100,000 over. Before placing my money anywhere, I always go through the same thought process. Number one, who am I placing my money with? Chocolate Finance is a fund management company licensed by the Monetary Authority of Singapore and has been operating since July of 2024. It was founded by Walter de Oude, who also founded Sing Life Insurance. You'll actually hear from Walter a little later in this video as well. Understanding who's managing my money gives me the confidence before I even think about the investments themselves. So number two, what am I actually investing in? This is the next thing I want to know. Where is my money actually going? Inside the app, I can head into my account, live account statements, I'll show you on screen over here, where I get real-time updates on exactly how my funds are being allocated. These are established funds by well-known fund managers, and our money is allocated to 5 funds. Currently, the largest holding is in Lion Global Short Duration Bond Fund. It invests in short duration investment-grade bonds, including bonds that typically aren't directly accessible to retail investors like us. Investing through a fund gives us access to a much broader portfolio than buying individual bonds ourselves. Another example is UOB Asset Management United SGD Fund. The objective sounds quite technical. It says it invests in money market instruments, short-term interest-bearing debt securities, and bank deposits to achieve a yield enhancement over Singapore dollars. In simple English, it just means it's trying to generate returns similar to or slightly better than what you typically get from a bank savings account by investing in short-term, relatively low-risk instruments. So if you're expecting stock market returns of 6%, 8%, or even higher, that is not what this is designed for. The objective is to generate a reasonable return while keeping the risk appropriate for money that you'll need within the next few years. And that's exactly why Chocolate Finance fits into my short-term cash strategy rather than my long-term investment portfolio. So how does the top-up program actually work? Through the top-up program, Chocolate Finance is currently offering 2% on the first 20k, 1.8% per annum on the next 80k. If the underlying funds generate lesser than these returns, Chocolate Finance will top up the difference. As a consumer, I actually really like this because it aligns their interests with mine. The better the underlying fund performs, the less they need to top up themselves. Of course, these rates are part of the top-up program and can change over time. So always check the latest details, which I'll link down in the description box below, before investing. Like any investments, capital is not guaranteed. Chocolate Finance isn't a bank. It also isn't a savings account, so it's not covered by the SDIC deposit insurance scheme of up to $100,000. That's it, because it's regulated by the Monetary Authority of Singapore. Clients' assets are required to be kept separate from Chocolate Finance's own operating fund. In other words, your investments are held separately from the company's day-to-day business funds, which provides an additional layer of protection should anything happen to the company itself. So while I consider it relatively low risk as part of my short-term cash strategy, it's still an investment and it's important to understand the risk before deciding whether it's suitable for you. This is also the reason why it's the second layer of how I manage these funds. We have our foundation in something secure and another layer where we can take on a little bit more risk for slightly higher returns. So I know the question that you have in your mind is, what about withdrawals? One thing that I always look at when managing short-term cash, especially short-term cash, is how quickly I can get my money back. With Chocolate Finance, you can withdraw your money anytime. Officially, withdrawals can take up to 3 days, but Chocolate shares that they are usually processed much faster than that. Most are with you within minutes and almost all within 36 hours. Of course, I didn't just want to take their word for it, so I withdrew $50,000 myself to see how long it actually took. On 27th of July, I initiated the withdrawal at 9 AM and received the amount in my bank account at 5:48 PM on the same day. So that's for withdrawals. Beyond managing short-term cash, Chocolate Finance also has a Visa debit card. It's a debit card, not a credit card, which means your spending is directly deducted from your Chocolate Finance account as it earns the daily returns. One feature I really like is that there are no foreign exchange fees, so it's great for overseas spending. On top of that, you get to earn 1 max mile per dollar spent, capped at $1,000 of eligible spending each month, and 0.4 miles thereafter uncapped. If you've watched my previous video, you'll know I'm a big fan of Max Miles. They never expire, and my last 2 Singapore Airlines business class flights to Korea were redeemed using the Max Miles that I've accumulated. And if premium cabin travel isn't your thing, you can also redeem your Max Miles for cash by uploading eligible travel receipts at a rate of 1.8 cents per mile. Haymax has introduced quite a few new features since I last covered them, so I'll probably do an updated video in the coming weeks. Personally, I use the Chocolate Visa debit card for public transportation rides here in Singapore and for paying certain insurance premiums. These are expenses where most credit cards don't earn any rewards at all, but with the Chocolate card, I'm still able to earn up to 100 max miles each month. Since launching their SGD portfolio, Chocolate Finance has also introduced a USD portfolio and has even expanded into the Hong Kong market. My main point of contact has been George, the Chief Customer Officer at Chocolate Finance, so I asked if they could share a little more about what's coming next and any exciting developments they have in the pipeline. So let's hear from Walter, the founder of Chocolate Finance.
Hi everyone, I'm Walter, the founder of Chocolate Finance. Firstly, thanks for watching, and to Demi for inviting me to be a part of this video. When we started Chocolate Finance 2 years ago, our goal was really simple. Just build a better home for your cash. Not just to deliver more than what banks do, but some way that makes you feel happy about your money. And that's exactly what we've done. I think we've nailed it. Great, consistent returns, fast access, simple to use. And the proof is in the numbers. We have almost $1.4 billion and 150,000 customers. And that's real evidence that people like what we do. And we're doing what we said we were going to do. I'm incredibly proud of everything we've built so far. We've made withdrawals super fast. Most of them are arriving instantly or on the same day. We're expanding our rewards program with Haymax. We're improving our referral program. We've added Samsung Pay, Apple Pay to come again. And we're currently launching our Chocolate Finance business accounts for business owners too. But honestly, we're only just getting started.
A huge thank you to Walter for saying yes to my rather spontaneous request and for recording that message for us. I'm actually also trying out Chocolate Business Account for my business, and I'll keep you guys posted. I first started speaking with the team back in late 2025, and one thing that I've genuinely appreciated is how open they are to feedback. If you have any suggestions or features that you'd like to see, they actually have a feedback page on their website. I'll leave the link down in the description box below, or just comment below and I'm sure they'll see it too. As always, remember that there's no one-size-fits-all solution when it comes to managing your money. The best place to keep your cash depends on your time horizon, your financial goals, and your own risk tolerance. For me, Chocolate Finance fits into my short-term cash strategy, particularly for monies that I've been setting aside for my home. It doesn't replace my emergency funds, and it definitely doesn't replace my long-term investments. It's simply a tool that serves a different purpose for this point of my life. I'll leave all the relevant links in the description box below. I hope this video gives you a better idea of how I think about managing short-term cash. As always, if you have any questions, leave it down in the comment section box below. Have a great week ahead, and I'll catch you guys in my next video. Bye-bye.